What's going on, guys, and welcome back to the next video in this series. Now, if you have not checked out the first one, we were looking at Elliott Wave on the real charts, focusing on sort of what it looks like, breaking down the charts from sort of a start to finish point and looking at it on how to analyze it in the real market and everything. So if you have not checked that out yet, definitely go check that out. If you have not seen anything in the series, make sure to click on the Elliott Wave playlist on the channel and see the entire series. There's a lot of helpful information before we start diving into the more intense stuff, all right? So make sure you go check those ones out before we dive into this one, all right? Now let's play this out. Now this will be trading with Elliott Wave. Now, like I said, previous video we discussed on analyzing the chart with the Elliott Wave, looking at Elliott Wave in the real markets. Now we're going to look at some examples of how we can use Elliott Wave to trade, knowing the rules, the guidelines, and everything we could potentially look for. All right. So basics to Elliott Wave. We'll look at when we want to trade. Now, knowing Elliott Wave, we know we generally want to be trading most likely that third wave of ours, which is going to be all the strength in the market is going to be in that third wave. So let's draw a bit of a scenario that we have. Let's have a potential scenario we have over here. Obviously, we've got price on this side and we have time on this side. Okay, general normal chart, doesn't really matter what we look at. Let's have a quick look at the charts. Now let's say, for example, I'm going to start real basic with this. Okay, so we can see, let's say we have a nice C wave structure to the downside. Actually, let's get in a bit more detailed. Okay, we can see 1, 2, 3, 4, 5. We see maybe a triangle structure back to the upside, A, B, C, D, and E to the upside. Now we know we're going to have a potential move to the downside. 1, 2, 3, 4, 5. And now we've seen our internal structures as well, and we can start to assume that this was, knowing this, a triangle indicates the last sort of push back down to the market. We can say, okay, well, market generally probably will start to turn around. Now we won't be taking a trade straight away into that, guys, because this could potentially still be, this fifth wave could potentially still strengthen or extend as well, which means the market will push further lower, and that could cause us obviously to take a loss. Now we need to figure out when can we enter the market, when we can start to enter, knowing that we could potentially look for moves back to the upside, catching the nice big move. All right. Now, what we want to be looking for, like I said, we want to be catching it on the downside. We want to start catching it to the upside. Unfortunately, it's going to be extremely difficult to catch any market. Doesn't matter what analysis you do, it's going to be extremely difficult to catch the very exact bottom. So we have to wait for a bit of confirmation from the market. And with Elliott Wave, we do know what we're looking for. We see, if we see a five-wave structure to the downside, ending this 1, 2, 3, 4, and 5, we can say, okay, potentially what we're looking for now to indicate a turnover of that market is a five-wave structure of fairly the similar sort of size to this one back to the upside. So what we want to look for is a five-wave structure back to the upside. Now we can say, okay, well, this is either going to be a wave C, knowing this could be potentially a wave, like I said, a fourth wave to the upside, but knowing that we have a triangle over here, guys. Now this isn't always going to play out like this. This could be a zigzag. We have to be a bit more careful, but in this example, if we have a triangle over here and we see a five-wave structure back to the upside, we know we won't be seeing a sort of a ABC structure, because a triangle is either a fourth wave or a B wave. All right, so we know this is sort of a final push for the market to the downside. If we see a move back to the upside over here with five-wave structures, most likely it'll be that initial kickoff. Okay, so what we're looking for now is we're looking for a three-wave structure to the downside. If we see a triangle to the downside, we need to start rethinking our strategy, because if a triangle cannot come forth in a second wave, we already know that from watching the previous videos. If we see a three-wave structure, regardless whether it's going to be a zigzag or a flat, we can now say safely, okay, well, this market's pulled back down. I know my rules. We've got waves 1 and we've got potential wave 2 over here. Now we've got our low from the start of wave 1. We also know our rules mean that wave 2 can't go into the territory of this first wave. So what we can look to place our trades now is, now we can start to looking at taking a potential buy in this market. All right, so we can look at entering over here, and now we need to always, guys, with a stop loss, always a stop loss, whether it's a physical stop loss or a mental stop loss, you need to have a stop loss in trading to protect your capital, guys. The important part about trading, guys, is protecting that capital. You can't trade without it. It's like a team sport. You can't play without your team. You need to protect your team and your players. Same with trading. You can't trade without capital, guys. Protect your capital. All right. Now, looking at the structure, we know, okay, well, the market's not allowed to go past that first wave. All right, so we can now put our stop loss safely below this. If it does go past this, guys, the market can always surprise us. Our wave count could be wrong, so we only do it to the best of our possibilities. If it does go past, we know we're wrong, and we need to adapt to the market and maybe perhaps look at recounting. This could be perhaps a different sort of structure that we're looking at. Instead of a triangle, we could be looking at a 1, 2, maybe 3, 4, and 5 now, where this could have been an extended wave. So we also need to make sure we count the internal waves of that triangle as well before we move on. Generally speaking, in Elliott Wave, we want to see 3 sort of internal structures. Now, what I mean by that is if we have, let's say, for example, a wave 1, 2 to the upside, this will not be sufficient enough for us, and neither will 1, 2, 3, 4, 5 ABC. This will also not be sufficient for us. What we really want to be seeing are 3 structures. So we want to be seeing 1, 2, 3, 4, 5 ABC, 1, 2, 3, 4, 5 ABC, 1, 2, 3, 4, 5, and then 1, 2, 3, 4, 5, ABC, 1, 2, 3, 4, 5. Guys, we want to see the entire structure play out. This is gonna, obviously, the more we see, guys, and the more we analyze, the more likely or the higher the odds are in our favor, guys, if we make sure that we analyze the market properly instead of just having a quick glance at things, as we did look at the previous video. Now, this goes for any technical analysis. If you just have a quick glance at the market and saying, yes, there's my trade, I'm going to take the trade, you know, the market could potentially burn you because you didn't do a thorough investigation of the chart. Okay, now let's say we've seen our counts, we've seen everything, we've taken the trade, now we've put our stop loss below the area. Now, target wise, guys, we know with generally speaking, with normal analysis, people will be looking, or normal traders, technical analysts will look for, you know, resistance zones, or maybe even look just for that little push back up to there for resistance. But knowing Elliott Wave, we're looking for the 5-wave structure count. We know wave 3 is generally our biggest wave. So let's see if we have a move to the upside. Let's say, for example, we're starting to see the market push, and we'll talk about managing our stop losses and managing our take profits. Now, it's always a good idea to have a target, a preset target for Elliott Wave, you know, coming up. With any trading, it's always good to have a preset take profit. Well, we'll talk about that as we dive into it. The next video will be focusing on using Fibonacci to look for further moves and where the market will most likely finish its waves. Okay, but this will be focusing on purely just the wave count to look for exit. So we're not going to be focusing on a preset take profit yet. We will look at that in the next video coming up, or the next series. We'll be focusing on implementing Fibonacci into our trading. Okay, so let's have a look and see. So now what we're looking for is a 5-wave back to the upside. We could look for a nice, we know 3 waves are generally, our 3rd wave is generally extended. We see a nice pull back to the upside, and we see a nice market pulling back, whether it's sideways or anything. So let's redraw this one, because we want to see, we've got internal counts over there, and we see wave 1, 2. Now we're already starting to see, okay, well, this looks very promising. We're seeing the market go past. We've taken out that top of that zone, that top of that sort of peak of the first wave. Now we know, okay, well, the market probably has started. This is most likely wave 1 and wave 2 of our 3rd wave, which is a very good indication. Now, once we've broken past this sort of resistance up over here, we can be very satisfied knowing that wave 1, wave 2, wave 3 has now gone past that zone, indicating that we're right even more. Okay, so now we see a big, nice push. We've got waves 3 really pushing the market, really extending generally what wave 3s do. We see a nice pullback, and we see it finish. Let's say we see it finish on that resistance. Now, a normal trader knows, okay, well, I'll probably close this trade because, you know, I've reached the resistance, the market will probably start pushing down. But us as Elliotticians know, we probably have waves 1, 2, 3, 4, and 5. Now we need to make sure if the market's wrong, we don't get burnt. So what we'll do in this case, once we've seen a nice sort of full move to the upside, we can use the Elliott Wave rules to protect ourselves with trading. So what we can do now is we can move our stop loss. Knowing the rules, we can move our stop loss just below the start of that wave 1, because we know our rule was wave 4 cannot go into the territory of wave 1. So this wave 4 is not allowed to go into this territory. If it goes into this territory, we know our wave count was wrong, and we'll need to look at restructuring. Okay, like I said, we're not always 100% right. We just follow what the market shows us. So we see the market's pushed up. We can move our stop loss to maybe to break even, or even a little bit higher, as long as we're below that low of the high peak of wave 1. We know we're most likely going to be very safe. We see the market start to consolidate. Now, obviously, people who don't know Elliott Wave will probably start to panic, thinking, okay, well, the market's hit this. This was just a retracement, and we could start now looking to start moving back down. Okay, so we could see the market start to push back down. We see a ABC structure come to the downside. We know wave 2 was quite sharp, so we could perhaps look at a sideways consolidation. So let's say we have that. We see the market push up, and now we have our normal technical analyst saying, look, we've got at resistance, we have a double top. There's a nice opportunity to sell. They're not wrong, but they don't have a very big trade coming up. You know, we see a wave 1, 2, 3, 4, and 5, and they would go, you know, perhaps we'd see the structure break of the support, and people would think, okay, great, this market's going to completely collapse back down because we've had the double top, we've hit resistance, market can push down. But knowing Elliott Wave, we see 3-wave structure to the downside. We have a potential wave 3 up here from 1, 2, 3, and now we can say, okay, well, we saw the 5-wave structure. Let's hold up. Let's wait. I've got security over here. I've protected my trade. If it does stop me out, I don't make as much money, but at least I don't lose that capital, which is good. And we're potentially looking for more moves in the market, right? We know the structure. We saw this sharp sideways corrective over here. We saw this sideways correction over here. We know, okay, well, we've got 1, 2. Wave 2 was sharp. Wave 4 most likely will be a sideways structure. We see that. We see the 5th wave completing. We see other normal technical analysts take a sell and a sell again at the break of that support. But we know what could potentially be coming up for us. Okay. Now we see 5-wave structure back to the upside. Now that beautifully indicates our initial 4th wave. We know, okay, cool. Let's see if we can find anything in here. Now we know, again, we're reaching that support zone, that resistance zone. We have a normal technical analyst taking, okay, well, we've just another third. We've got a multiple top retest. Let's take a trade to the downside. Now the market will give them that little bit of hopefulness, giving an ABC. Now we know that's probably for wave 1 of wave 5. So we see the retracement. They've taken a sell. They're very happy. But now the market has finished that sort of last wave, and now we're starting to see a push back to the upside. They just lost their account. Everything's not so great for them, and they see that 1, 2, 3, 4, and 5, and we finish off with our 5th wave. Okay, now we know this is done. This structure is done. Now we need to start looking at closing potential trades. Now, also putting a little bit of technical analysis in there, we could most likely see the 5th wave sort of come close to any sort of resistance. Elliott Wave still plays out on support and resistance, guys. That always still plays out on support and resistance. We see consolidation. We see, head and shoulders where we see, support, resistance being played out over here, support being played out over here. We see another sort of head and shoulders structure over there. So technical analysis does show up, but Elliott Wave gives us a bit more of an in-depth analysis at that. Now that we've known before this happens, right? Before the structure happens, once we see this 5th wave structure to the upside, we can now look at moving our stop losses from here. Let's get a different color so we remember what we're looking at. We can now look at moving our stop loss from over here back to just over here, because we know this is potentially wave 1 of wave 5, and that gives us a much bigger protection of this market. Now once we've seen this play out, we could actually even potentially look at trading that 5th wave as well. So now what you could do, seeing that retracement over there, you could look at, always remember, we need to see that 3-wave structure, so we need to make sure that we definitely count these internal waves. But we could potentially look at taking another trade over here and placing another stop loss below over here. All right, now we've got doubled up the trade. We've got a massive margin of protection over here for the market, right? A big protection, lots of money already been made in the market. We protected ourselves with a stop loss to break even, and we could now look at taking another entry to finish off that 5th wave, and market moves up. Now that we've seen our internal counts, guys, we need to make sure that we close the trade when the market's given us the opportunity. We can't hold on to this thing forever, okay? And because swap and things will start to calculate, and you always want to make sure you get a little bit of something out the market. So now we see, our wave structures finishing up, and now we know, okay, we've got 2 trades in here. The market's given us 2 beautiful trades, lots of entry. Let's look at taking that trade, closing the trade, and that sort of structure, okay? So that's kind of how we trade the basics of the impulse wave. Now let's look at trading the triangle. Now the triangle is another structure in the market that's a bit of an easy one to see. Like I showed you in the previous video, if you take a step back and look at the market, the triangle does generally pop out. Okay, so let's have a look at the triangle structure. Okay, Now, like I mentioned, the triangle only shows up in wave 4 or wave B. Okay, so we need to be a bit aware of the situation we're sitting on, because remember, thinking about the previous video we made, wave 5 or wave C could potentially not be an impulse, but rather an ending diagonal, which could be a bit of a headache for us if we're looking to trade that. So we just need to make sure that we're aware of this, and if we do want to trade it, we need to have the patience to sit out this big retracement. As long as the market doesn't break our rule of wave 2 coming past the start of wave 1, we will be fine. Okay, so we just need to be aware of that the market could be a bit of a potential threat for us, or not threat, but rather a bit of a headache where we have to wait a bit longer for the move to finish out, and we might not always get as much as we wanted out of it. All right, so just be aware of that. Okay, but I'll show you guys a bit of a trick as well, where we can use the triangle to use that to measure how far the fifth wave could potentially be, or the C wave could potentially be. All right, so let's say we'll just use a normal 5-wave structure again. We've got 1, 2, 3, 4, 5. We've got our 3-wave to the downside. We've got 1, 2, 3, 4, 5. Actually, let's make this a bit smaller, otherwise we won't be fitting in this chart. 1, 2, 3, 4, 5, A, B, C. 1, 2, 3, 4, 5. Actually, let's make this a bit longer. 4, 3, 4, and 5. And now we're starting to see that triangle shape form. Now we don't want to be trading the triangle, just like we don't want to be trading any sort of consolidation. The consolidation is never a nice place to trade. So we'll have to wait out. We don't want to be trading in general. If we're trading on the time frames where we're looking for impulse waves, we don't want to be trading against the trend. The trend is your friend regardless of what sort of strategy you trade. Okay. Now, obviously, Elliott Wave, we're looking for reversals, but in general speaking, the trend is your friend. That's why we wait for a confirmation that wave 1, wave 2 doesn't take out the start. We wait for the confirmation of a new trend to start. So we're still technically trading with the trend. We just caught it early. Okay. But now we've already got this move, and we want to continue on with the trend. We're looking for a finalizing move, a finishing move of this market. Okay. So now we start to see 3-wave structure to the downside. Okay, we're thinking, okay, well, this wave's not quite as large as we see over here. We do have a sharp correction, so chances are the sharp correction most likely will be either a sort of a sideways correction, or like a flat, or potentially a triangle. Now we see a nice 3-wave structure to the downside. Like I mentioned, we always want to be looking for the internal waves as well as we go up to give us a better confirmation. But we see a 1, 2, 3, we see A, B, C back to the upside. We know, okay, already, well, this is most likely going to be a flat or a triangle, because we've got 3 to the downside, we've got 3 to the upside. Now we know it's going to be a sideways correction. Now we see 1, 2, 3 to the downside, and we think, okay, well, something's happening here. Let's have a look. Okay, we're not going to take any trades yet, because this could still play out as 1, 2, 3, 4, 5 and finish as a flat corrective. So what we want to see is a 3-wave structure to the upside. 1, 2, 3. Okay, now we don't have to worry about finishing that one off, because we know we've got 3, 3, 3, which means we already have the setups of a triangle. We've got waves A, wave B, and wave C. Now, knowing the rules of a triangle, guys, with a triangle A, B, C, D, and E, we know that these waves, not this one, these waves can't take out their predecessors. All right, they can't take out the labeled waves A, B, C, D, and E. They cannot go below that. Now, knowing that, we can use that to trade over here. We know that wave, we've got wave D potentially over here. We know that wave E cannot go below the start of this C wave, because if it does, our triangle's invalidated, and we've got an incorrect count. We need to take a step back. Now, obviously, as we saw before in the previous video, the market's not always going to give us this beautiful structure that we see here, so we do need to do a bit of work. Now, we could be wrong, so we'll have to recount. But for this instance, we are right. Okay, we see the C wave. We know that wave E cannot go below the C wave. So what we can do is, you can enter it early if you want. If you think that wave E is only going to be a little wave and won't give much of a retracement or much of a chance for you to enter. So what we can do is, we can look at potential entries either over here, or wait for the market to retrace to finish the E wave, and so on. So what we'll be looking for now, knowing the rules, we can look at putting our stop loss just below that C wave. Okay, now that means if the market goes past that, our count is wrong and we need to rethink. But if we follow the rules, and the market follows the rules, and we're right with our count, the market pull back down, we don't have to worry about anything. Okay, and now we can start to look to the upside. Now, if we think about normal technical analysis before we talk about completing this trade and looking for potential targets, because we need to remember that the fifth wave could potentially not have any support or resistance coming onto it like we see with any of these sort of structures, okay? If we don't have anything to look to the left, we need to know when could this fifth wave potentially end. But before we move on to that, let's have a quick look at normal technical analysis. Now, we know in normal technical analysis, when we have any sort of a triangle structure, they would call it a flag or any sort of triangle structure, they would look for a break of the structure. Now, we do know if this breaks to the downside but does not go quite below that, we know an overshoot of that triangle trend line could mean the market explodes a bit more violently. But as a normal technical trade, as soon as it breaks the trend line, that's an entry point for them. So now they could be taking a potential trade that's wrong. So if we counted our waves correctly, we have a bit of an edge, a bit of an advantage, knowing, okay, well, it overshot a little bit. It still hasn't broken this low over here. So chance are there's a triangle. I don't have to wait for it to break past that zone to enter. I can enter it over here and just put my stop loss below there, giving me the max amount of volume out of the trade, which is another beautiful advantage of knowing Elliott Wave. Okay, so now we know we've got our structure, our A, B, C, D, E. We've got a triangle structure. We've taken that trade, but now we need to figure out, guys, where do we finish this market? Okay, where do we finish this trade? You know, as a normal trader, you know, you'll probably be thinking, okay, well, as a normal technical trader, well, we could potentially be seeing a double top, but for a triangle, there's a bit of a trick that I can show you guys, okay? So, looking at this triangle structure, what we'll do is we'll zoom in on this and we'll think about this. So we've got the move to the upside, we've got our waves 1, wave 2, wave 3, and wave 4 finishing over here. So we've got wave 3 up over here. And now what we can look for, we saw that triangle move to the downside, A, B, C, D, and E. The way to kind of look for a target for this market is we pull our trend lines and we look for the widest part of this triangle, which is obviously the widest part is this. That's the start of the triangle, so this is the widest part. Now we measure that structure and we place it at the end of our triangle structure. So if we have A, B, C, D, and E, we put it at the end of the E wave. We measure this and put it at the end of this E wave, and that is the potential target. So the same distance this is over here is generally where the fifth wave is going to enter. It's usually 100% of that move, but when we dive into the Fibonacci, we'll start looking at 61.8% of that move. But when we get to Fibonacci, we'll look at that. But in general speaking, if we measure this wide part over here and we place it at the end of the E wave, that's generally where our target's going to be. So the market could 1, 2, 3, 4, and 5 finish at that point. Now we know a triangle indicates the last push because it only shows up in a wave 4 or a wave B, which means it indicates a last final push to the upside before the market starts to reverse. So once we've taken our profit, guys, we need to know the chance this market won't continue further higher. So we need to be very careful, and we need to look at closing trades. So now once we've reached that target, we can close the position and we can look for the big deep retrace. Knowing this is now our fully got wave 5, knowing now we've got wave 1 and wave 2, or wherever it is, wave A, B, or anything like that. Okay, so that's kind of how we trade triangles, a bit of a hint into that. Now let's have a look at trading flats. So trading flats show up anywhere in any corrective wave. It's only a triangle that shows up in the fourth wave and the B wave that follows that rule. Okay, now a flat or a zigzag can show up at anything, any sort of corrective wave. So let's say we have wave 1 starting over here. We had a downtrend and we start to see 1, 2, 3, 4, and 5. Okay, now we know these ones have got the internal structures. Actually, let me draw these internal structures because we want to look for the confirmation. 1, 2, 3, 4, 5. ABC 1, 2, 3, 5. ABC 1, 2, 3, 4, 5. Okay, so now we can see we've got an internal structure. We've got waves 1, 2, 3, 4, and wave 5 up over here. Let's start to look for a corrective wave. Now, seeing we've got one structure, we've got two structures, and we've got three structures as well, okay? So we've got the whole structure. So now we can say this is potentially wave 1 over here with all its internal structures as well. So let's start looking at this corrective wave. Now we start to see a move to the downside. Now another nice hint of Elliott wave is the previous retracement. Usually for wave 1 we can use a bit of Fibonacci, we'll get into that. But generally speaking, especially in a fourth wave, if we see waves 1, 2, 3, 4, and 5, this could be a potential, a nice sort of way to think about it. Actually, let's say we're looking to trade a flat in the fourth wave. You know, we need to know that these waves all have the internal structures 1, 2, 3, 4, and 5. What we generally see in Elliott wave, in the fourth wave, we see this fourth wave retrace all the way back to the internal fourth wave. So if we've got wave 1, wave 2, wave 3, wave 4, we have wave 1, 2, 3, 4. Sorry, 1, 2, 3, 4. We see that wave 4 come back to the previous internal fourth wave structure. Now this isn't always true for the first wave, because the second wave is generally the biggest retracement since the start of the trend, so we could see that pull back a bit more. But as we dive into the series, we can use Fibonacci to look for potential targets for the market to retrace back to, so we have an idea of where the second wave will most likely retrace into. Okay, so that's just if we trade any sort of corrective, and if we want to trade that fifth wave, we can look for that. But we'll focus here on the second wave. So we know we've got a 5-wave structure to the upside, all its internal waves. Now we're starting to look for, we start to see A, B, C. We see, okay, well, we can't really see any internal structures in here. This is most likely going to be either a flat or a triangle. Now, knowing what this is, if this turns out to be a triangle over here, we know this is not wave 1, but rather wave A. Okay, let's say we have no idea what the previous wave count was over here. We're all using the now to count these waves. So if this structure ends up being a triangle, we know, okay, well, there's no way this is wave 2. We know the rules. Triangles don't show up in waves 2, and they also don't they only show up in wave 4 and the wave B. Okay, so if this turns out to be a triangle, we know, let's have a re-look at our count and maybe label it something else. But for now, we have wave 1. We see a 3-wave structure to the downside, okay, and we think, okay, cool, let's wait and see what happens. Funnily enough, this one did retrace back to the zone of that previous fourth wave, and now we start to see the move push back up. We see A, B, C. Now we see a head and shoulders in there, which is fine. We also see a bit of a double top. Now, knowing people who trade double tops, I'll say market was just a bit of a retrace from this big previous trend we had back over here. So maybe this is a retracement. We see the double top. Now we can trade it back to the downside, and their hopes will be built up again with a 1, 2, 3, 4, and 5 structure to the downside. Now we know, okay, something's not right over here. This is not quite right, okay? We know that this was 1, wave 2, but as a normal analyst, technical analyst, we say, okay, double top, market's going to continue back to the downside, and we know this is not the case. Not always the case. So we know what to do next. We can see we've got wave A, B, and C with all their beautiful internal structures. So we can now label this as wave 2. And knowing that, we can now start trading, okay? Knowing that, we can now obviously go back to that previous little setup we spoke about, take our entry, nice and tight, and stop loss we need to place below, okay? Below the start of wave 1. And now that we know we've got wave 1, wave 2, we still have a flat here, so this could still be wave A, B, and C, okay? But we have the structure playing out. So let's have a look and see what happens. Now the market starts to move. We've got 1, 2, 3, 4, and 5. Now we know, okay, market will probably come to retrace. We've got a 5-wave structure in here. We're looking for the market to retrace, but potentially we have that first wave of that initial push. Okay, we see A, B, C, or let's have a bit of a difference. We have A, B, C coming back down, starting this off. Now again, as a normal technical analyst, we see this rejection. We see a potential fake out of that market. We see it in shoulders. We think, okay, well, again, this is playing out as a multiple top, but let's trade it back to the downside. And again, the market's going to disappoint you, all right? The market's going to disappoint you again. As Elliotticians, we know this cannot overtake that first wave. So we can maybe look at even now moving our stop loss, not necessarily into break even, but all the way back that low. We can now look at moving it just below the start of that wave one, which minimizes our risk a lot already. Again, protecting that capital. Now we start to see, you know, normal technical traders will say, okay, well, this is a move back to the downside, and I'm going to take it back down with the direction of the overall trend. But we know a little bit more than they do, right? So we see the one, we see, let's say we see one, we see rejection again. Those technical traders will say, no, it's rejecting. I'm going to take another sell back to the downside because it's rejecting this overall resistance. We know 1, 2, what are we looking for? 3. There's their big disappointment. Their market blast past it, and now they're fearing out. Now again, newbie traders, for example, will look at saying, I don't want to miss this move. The market's pushed so much. Let's take that trade. Now they're going to get disappointed. Market's going to start giving us a little bit of a correction, and they think, oh no, I've missed it. You know, the market's going against them. They close the trade, but we know 1, 2, 3. What are we looking for? Wave 4 and wave 5. So we hold it. There's our beautiful 1, 2, and wave 3, finishing off 1, 2, and starting off with that third wave. Okay, so that's kind of how we trade the structure. Now we're back to that other sort of setup, whether it's going to be a triangle or a zigzag. We know, okay, cool, we've looked at that before, let's play this game. Now we know that wave 1 and wave 2 finishes over here. If we want to hold this trade even longer, we know wave 4 cannot come into the territory of wave 1. So let us take our trade, move our stop loss below this, actually below this zone right over here, because we know wave 4 cannot come into the territory of wave 1. We've already taken a freely about a 1-to-1 risk reward ratio trade. What it looks like from just looking at I from here, we know what's going to happen. And we also have internal structures: wave 1, wave 2, wave 3, wave 4, wave 5. We know that chances are this fourth wave will most likely retrace back down. Okay, we'll retrace back down to this previous fourth wave, like we explained back over here, which will give us another opportunity to take yet another trade, finishing off with the fifth wave. Okay, finishing that fifth wave and making us a very happy little camper. Alright guys, now I hope you did enjoy that video, guys. Again, we'll be looking at what Fibonacci is, and we'll start implementing Fibonacci for potential take profits in Elliott Wave. So make sure you stay tuned for that video coming up, guys. If you are not yet subscribed, make sure you do so, otherwise you won't know when we get these new videos. So subscribe, click that bell icon to get the notification of the new videos, guys. Also give a thumbs up if you did enjoy it. Leave a comment down below if you have any questions. And always, guys, stay tuned, trade safe.